Want to switch gears here for a moment and talk about some more traditional companies, talking about the banks. They kicked off our earnings season today with some pretty strong results. We heard from Goldman Sachs, JPMorgan Chase, and Wells Fargo. And while each of them were different, there were some common themes throughout. Yahoo Finance's Julia Roche is here now to break it all down for us. Julia.
Yeah, some really impressive numbers coming from JPMorgan and Goldman Sachs when it relates to investment banking, also trading activity. Just to kind of walk folks through what happened with JPMorgan, they reported adjusted earnings per share in the first quarter of $4.50. That beat estimates of just $3.05, while revenue also topped expectations, coming in at $32.3 billion compared to estimates of $30.42 billion. The bank earned in the quarter $14.3 billion in net income. That is up by $11.4 billion from the year prior. A lot of that was driven, of course, Alexis, by the credit reserve releases of $5.2 billion, which also lifted the earnings per share number that I referenced earlier. It lifted that by $1.28. JPMorgan CEO Jamie Dimon did have some commentary about the credit reserves. He said that $26 billion figure is appropriate and prudent, all things considered. He also echoed his upbeat commentary just given last week on the U.S. economy. Remember, he did talk about a multi-year growth that could happen. He did make some comments about loan demand that got quite a bit of attention, that has remained, quote, challenged. I was on the earnings call for reporters, and he said, quote, I think I made a mistake in my quote using the word challenge. What happened is the consumer has so much money that they're paying down their credit card loans, which is good. Their balance sheet is excellent and in outstanding shape. He also said consumers are ready to go. They're starting to spend money. And that's not the same as loan demand when the economy is weak. Now, turning over to Goldman Sachs. Wow, they had a record quarter when it comes to those quarterly revenues of $17.7 billion. That is more than double from the first quarter a year ago. Adjusted earnings per share beating expectations, coming in at $18.60. Sorry, not billion, $18.60 compared to estimates of $10.07 per share. And they just had, their businesses were quite strong, especially investment banking, coming in at $3.77 billion, driven by that equity underwriting hitting records. Alexa.